Welcome to Masters and Crew. We are just a group of friends and colleagues who get together and share ideas and what we are doing to try and plan for retirement. This is not financial advice, but just things we are doing as a group and is strictly for educational purposes. It is up to you to do your due diligence on anything we talk about. Today, we will be discussing utilizing the Fidelity trading platform. With that, let's get started.
All right, we good to go? All right. Well, thank you guys. Our monthly little lunch bunch. I'll actually say, even though I'll put it at the intro whenever we record it, but again, this is not financial advice, just what we're doing. So today, we're going to talk about, there's some questions that people wanted to know is how do the different systems work from kind of a trading standpoint? How do I do some research utilizing Fidelity or E-Trade? I should have brought my E-Trade account up to show how that trades are shown up there. But for the most part, what we'll do is we're going to just go through what Fidelity has. Now, of course, as everybody sees, we're on the base Fidelity site. I personally love their new Fidelity Trader Plus. It's a client you can download onto your computer. They also do have web, which I'll show you here as well. I've been using their older version of Fidelity Trader. I forget what exactly it's called, but it's a little bit more clunky, a little bit more 80s, 90s, maybe 2000s look of very old school. Anybody that's ever kind of done the Oracle Forms kind of looks like that boxy type stuff. And what I'm planning, if I can remember to bring my notes over here, we'll see if it actually plays out, because talking with Chris on the way over here, I guess everything has gone from green to red this morning, or this afternoon. Basically, just start off here. So when you go, because normally when you log into your Fidelity, it kind of gives you really the 401k side. So the Fidelity, it gives you the net benefits screen. So then if you click on my investment accounts, it'll take you to the normal Fidelity side of things. A couple things that I really like to do is at times I will use this balances when I'm trying to figure out how much do I have available to trade. So if you'll see in here, oh, Gemini. Got it. Go away. So as you can see here, so you get your ability to trade. It tells you what's settled in an account. If you actually have stuff outstanding, it'll tell you. So you'll see that there's actually, in some cases, there can be differences between what's available to withdraw and what's available to trade. So you can do your trade, do that, and then your withdrawal may or may not be the same. Just kind of depends on the timing of things. So I will start off with just going kind of over come on. So here you have Fidelity Trade Plus Web, or you have the Fidelity Trader Plus. You click on that, that'll send you to a download site so you can download the client locally and then run the install that way. Pretty much what's really nice is it looks about the same. So if I go here, it opens up another screen. So this is what the new site looks like. So it's going to tell me about everything that's been released. We go back, if you go back and you go so I want to just trade. As you know, this is how the, just straight out of the Fidelity site it looks like. I really like Trader Pro or Trader Plus because you can set up different things within your summary. You can set up different workspaces and everything else. And so this is a summary. It kind of shows you, so I can go into certain accounts. So you see this one individual account. I've got Celsius and Misty are in that account. Not doing very well. But then you can see what I have from a cash standpoint there as well. And if you go over, you can look at the various charts. So these charts can be it's usually tied to one of the other, what do I have this tied to? Trying to figure out. Oh, this one's actually tied to Amazon. So you can see Amazon here. If you decided I wanted to change up here, so let's go to Google, you'll see that everything's stacked and tied together. So now you'll see all the Google information, Google, any news related to Google. In this case, if you want to go over here and look at the option chain, it kind of looks the same as kind of what you have been used to in the web version of the Fidelity site. I like the black. That's just me. And so you can go here and you can do the standard stuff that you could do from the site. Now, this is where I really think it's a game changer. This is actually the client. So this is installed locally. At the current time, I've set up 3 different pages. So I've got this main page here, which shows all my accounts. And as you go down through here, you can see actually, so you see PayPal, I actually have an open order, probably not anytime soon between now and, what is that, the 28th? I doubt my close on this put is going to execute because as of right now, it's $6 under from the 66 put that I'd put on here. So it'll tell you where you have open orders. Over here, I've put in my orders to actually show me what I have open orders on, just so I can kind of track things during the day. Down here, in this case, I've got it set up so that I can do my various watch lists. So as you can see here, these are some that I'm watching. I've also then set up other ones where here's just my AI related. I've got another one that's related to defense and aviation. You can then just click on, I don't know why it's saying, that's the one thing I haven't figured out here, is even though it's not after hours, it'll still show after hours over here, where the other client does not do that. But you can sort it here so you can see, hey, I want to see what's my, what's coming and going as well. Then over here, I forget what exactly this one is. I think that's actually my option summary. But the one I like here is it's not quite as good as a paid version of Trading Pro or Trading View, which I really like. But it allows you to do a lot of things. So in here, I've got my regular stock chart. So I've got here, this is the lower and upper Bollinger Band. Here's the middle. Then I've got the 50 days in red, and I've got the 200 day in green. And this is just how I like to set it up. Now, there's a couple of the things that you can get in Trader View that I don't have here. Some of the IV spikes that I haven't found that right one to add it in here. But this pretty much gives me the RSI, so I can see here where it's at for this. It doesn't always stay as nice when I start looking at, okay, so where am I at right now? So it was as low as 25 today. It's been as high as 28 and kind of goes that way. So this is the one that I use for my chart. And you can actually see here that I've got chart set up here on that one. And then what I have is then I've got a separate one that gives me an account, gives me what I may have in that account and what I've got for options here. So then you can see. One thing I don't like is when you set up your settings on it, is the most you can do is set it at 50. So pretty much every time I bring it up every day, I go to all strikes. Usually it's not a big difference, but sometimes it is. Especially by the default. I think the default is like 10 strikes. So I like to see a much wider range of things. Things that I also like about this on the option trading is you can actually go in on slide over here. With this, when you start looking at, you can go in here in columns, and so you can see by default, it gives you the strike, the action, the bid, the ask. So those are ones that are going to always be there. But then if there's different columns you like to look at whenever you're looking at an option, whether that's on the call side or the put side, you can go in and you can check and uncheck whatever you want. So one of the things I love here is that this one actually will give me the delta. So I usually, after watching Options with Ryan and several of the other ones, I've started looking at deltas a lot more than I ever did in the past. I usually, when I'm doing just a normal call or put, covered call or cash secured put, I usually stay within probably the 30 delta and below, just depending on how I feel. When I look at, like we talked about last month on leaps, when I start to look at leaps, I've started looking at the 70 delta, which usually those will mean that those are actually in the money, and the probability of profitability is higher than some of the others that I've done when I go down to more of a 30 or something that's currently out of the money when I do those leaps. So, but here, if you're interested in the gamma, theta, and those kind of things, then you can actually add those in here. What I was going to do today is kind of show, because we talked about it and some people have asked, so, okay, I've got all this. This is great. This is outstanding. Now what do I do with it? What do I do with it? I can see with it, but how do I actually trade anything or do anything? If you want to, you can, depending on what you're wanting to do, if you want to just buy shares, the normal website's perfectly good for that. This is also perfectly good for it, depending on what you want to do. If you want to take advantage of like our brokerage links or your individual accounts and want to do options, now of course, everybody knows me. I will not do level 3. I will not do margin options. Mine are only level 2. So it will either be a cash secured put, or it will be a covered call on shares that I already own. There's ways you can do also, poor man's deals of hey, I want to put this put, and then I'll put the covered call, but I own the shares that I'm doing the covered call of that transaction. So now in this case, I'm going to just use my HIMS. We'll see what it is. It's this morning when I first looked at it, it was up. So usually whenever I do a covered call, I like to see it in the green, because usually you'll get more premium if it's in the green versus the red. And just the opposite when I do the puts. Normally I'm looking for red versus green. When I looked at it this morning, up, but I'm still going to look at doing that. So some of the things that I do from just a normal standpoint is I track my stuff. So as we've talked about in the past, I think I talked briefly about bar chart. One of the guys I watch kind of pointed me to this, and it gives you it gives me a good range of looking at what the expected move is. So I like to go down here to the options to the expected move for whether I'm doing a covered call or a put. You had a question, Scott? I've got one of their free accounts, and before I'd never had it for the longest time, because really all I ever use on bar chart, I don't look at any of their other stuff, even though it's really cool, the other stuff that they have there, and it's very helpful, but I'm a cheap individual. So this is one thing that at this point, I'm not paying for. So that's kind of what I'm looking at here. So here I really use the expected move portion of it.
I don't like to pay for anything. It sounds to me like I've seen, unless you log in, you're not going to get more if you log in by going.
Right. For the other things, for like, if you really want to look at option strategies and those kind of things, yes. I've pretty much only used this site to date to look at the expected move. I'm sure there's other sites. It's just one that I found, one that I understand. So I go in here, because usually what I do is I go in and I have moved to, originally when I started this whole thing, I was doing 30-day, 45-day puts or calls. Then there was a short time frame that I was doing weeklies every 2 weeks. For a little bit, the premiums were decent, but that was just too much stress on me. from the movement standpoint. So I've kind of gone back to the roughly 30-day mark is usually what I do nowadays. But so in here, if I look at HIMS right now, so we may or may not make a trade on this today. So if we look at HIMS right now, they're saying right now they expect it to be around 40 and a low of about 28.50. We look here on this 29 days. Pretty wide. You see here that the implied volatility is 84%. They're talking about an expected move of, it looks like here, 16%. Or a $5.50 move. But then, to be honest, HIMS is a very volatile stock. So if you don't want volatility, don't play with HIMS. I mean, I think there's opportunity for it long term because they have a very dedicated group. But again, this is one that I've just done, and I'll be honest that I honestly don't know if I will really hold this really long term. This is one of where I'm probably one of the guys I really follow, really like. In this case, I'm being a speculator, really a trader, or, of holding it long term. You look, well, you got to remember, this is looking future. So this is what the money makers and the market makers and all of them are expecting for a potential move. So that's the way I understand it, because really unless I pull this out, and that's the one thing that I haven't figured out on the chart here, is how to kind of expand it out a little bit further to kind of draw lines in it, like you can with TradingView. Yeah. So I've gotten to where, depending on if I'm doing the leap, so I don't buy a whole lot of calls anymore because I've gotten my face ripped off on it. The GLD gold back in 22 just ripped my 11-day, my face off. Actually, my AGNC leaps that end at the end of this year, those have ripped my face off as well. So I've got to be really confident, and that's also one reason that I've started going down to the 70 delta, is because usually when I'm buying that's actually in the money. So I'm hoping that as it keeps going up there, because right now besides the AGNC, the only long call that I have, or the leap that I have, is Tractor Supply. And I should have gotten rid of it a while back when it was over 50%. That was probably about 2 months ago. Right now, I'm kind of waiting for it. If it hits 25%, I'll probably sell it and then look at doing another one further out. If you watch options with Ryan, he, like, within 2 weeks, if he gets 10 to 15%, I think he bails out. He's looking for just that quick deal. But as you can see here, when I go over here, I also am a geek. As you can see here, I've got a spreadsheet that I'll track what I've done. So if you look here, considering premium and everything else, even though I was assigned at 47 between all of the either covering it or buying cash secured puts that didn't execute, my cost basis is just under $40. So based off of that, I'll go over here to my options. So if I go 30 days out, now today's not a great day to be doing it. It would probably be better if I was looking for it to be an update. But if I go right now, they're saying 40 is $1 and something. What do we see here? What was it saying the expected move was again for 19? So it was saying here, it's saying the upper, and again, I use this as a guide. I don't, because I've seen it 2 days later, it's been completely different than what I'm looking at today. But again, the market's completely different 2 days later. So originally when I had HIMS, when I got assigned at 47, I then turned around at almost the next day and did one at 57 and got $2 for it. So I'll be a little bit more conservative in this case, and we'll just do the 50. That's a $10 gain from what my current cost basis is. Of course, that does not show here, because if you look up here at my HIMS, come on, open up. You'll see it tells me because of it doesn't track my previous. That's one thing you got to remember with Fidelity. It does not track any of your previous covered calls or cash secured puts that you've done and gotten premiums for, but never assigned. So you have to do that manually if that's what you want to do, or you can just say, hey, I'm just dealing with whatever I have at the time. So as you can see here, from a Fidelity standpoint, it would say if I didn't go to, say, 46, it may tell me that I'm going to lose money on this. I know from my tracking that I'm not losing money on this. So in this case, you know, and let's kind of see what it is. So if I were to do a 50, see what's that? That's one thing I haven't figured out here. So let's do 50 at 47. So you can see here. So I've got, what's today? Today's the 20th. And my whole spreadsheets are based off going to, I attended the Rural One, the town, what's his first name? Phil Town. I did his three-day weekend. I wish I would have gone to actually Georgia. That's a really cool, but this was also during all the shutdown time when it was just, life sucked. So if I go out to the 19th, and you see here, I also track what account I'm putting it in here. So this would be my brokerage link account. This is going to be a covered call. And really, I'm just looking to see what the percentage is if I do this at 50%. So what I say, that's roughly what, 40 cents? So if I get 40 cents at 50, well, that's only not even, it's a 10% there. But then if I were to go over here, let's go over to the options and let's go to covered call. And I may need some help there, Mr. Chris, on reading this because I always have a hard time reading this. If I go into HIMS, current price, and I'm going to say my purchase price, we'll do 40 because that's what I'm down to on this. If I go out here and let's see, where is December 19th? And I go to the covered call and let's go to 50. And we'll just take the mid-range. We could take the 42. Let's agree, calculate it. So it's telling me here that I've got, with what I've paid and the credit I will get, I'm looking at overall for that overall trade at a 26% return. So for me, I'm happy with that. I'm perfectly happy with that. And there's a
really good premium.
Yeah. And so, you know, hey, it doesn't, what I'll normally do then is also I'll turn around and put a buy to close at 80% of whatever that 40 is. So what's that? See what, 10 cents, 5 cents, something like that. I'll just put it out there and I'll just let it go out. So if it just crashes and says, hey, I'm going away, it just automatically closes it for me and I never have to worry about it. I do that also with my cash covered puts. I figured out what's 80% of what it is. I put an automatic buy to close out there, good until canceled. And then I don't really, now I say I don't have to look at it. I look at it. Let's just be honest. So let's go ahead. Let's go ahead and do this. So let's go ahead and we're going to go ahead and here. So if we see here, so then I pick what account I want. So in this case, it's going to be my brokerage link account. One of the things is I'll show you this. This is nice. So let's say I took my Roth account instead, and I want to do market. And if I click preview right here, it's going to tell me, oh, your account's going to be uncovered. So that tells me I do not personally own the 100 shares that I need to do this covered call. So it's a way. Now, I believe it would probably say something else if I had margin to allow me to do that, but it would let me do it. But this is just the way that this is my fail safe. And I don't know tell you how many times I've accidentally done that, not thinking about what there it is. So I'm going to say, hey, I want to do that. And as you actually can see here, right now it's saying the last one was 50. Let's see here. So I'm going to go ahead, put in one card there, and let's see if I actually get a better price than what there. So hit the market, place the order, and there it goes. So it tells me it was filled. This is orders. So it was filled, and it was filled at 41. So now for my tracking purposes, because I'm a geek again, I go over here and instead of point there, I'll do 4 to 1 so I can test it. So
Market.
yes, sorry, yes. So I've gotten lazy lately, and because actually I've seen, and I don't know why, I've seen here that half the time when I use this versus the website versus the older one, I'm usually getting a better premium when I just do it here. Because as you saw down here, it was telling me it was 40 cents. I got 41. The other times, sometimes if I decide that I want to put this call out there, but I don't necessarily want 41 cents. So in this case, say I wanted to do here. I'm gonna throw it over here so you can actually see here. This is the other thing. So as long as I have up here where see where it says number 2, I have the account shown. It shows that I have a covered call here on the sheet. So if I were to go out and say, hey, I want to do some other stuff, whether that's go out here and buy a put, I can see that I've also got a call already that's out here. So now, is what Chris was saying, is that if I don't want to just take whatever the market's going to give me. So when you think about it, the market's just going to give you whatever. So if you say, hey, I want to do it this way, sometimes you'll get more. Sometimes you'll get what you think you're going to get, the 40 cents. Sometimes you'll get less. It's whatever at that time when you place that order. So it could be, if you just happen to time it wrong and somebody else, there's a bunch of other people that decide to put in a bunch of orders at the same time, you may get less money. Now, what you can do, and we'll do that here. Oops. There. So my other thing is I was looking at, see, any of my stuff, is any of my stuff up to date or down that I would really be interested in potentially put on? These guys are just these guys are too volatile. Let's go to see what I said. I said brokerage links where I had money, right? Isn't that what I said earlier when I was looking at stuff? I think I was saying that. So let's go back to my portfolio. Go back to my balances. Let's go back to my brokerage link. Yeah, so I got $4,300. I like SoFi. Let's go see what SoFi is looking at. So start off here. Look here. So actually, it looks like it's down 3%. Now, I will disclose that I currently have 8 27s out there for, I think, next week. So for me, it's going to be heavy. Because, that's, if all those get assigned, that's 800 shares for me, which for me, just because I don't have huge accounts, it's a pretty big position for me. But I think long-term, SoFi has the markings because it's got its own ecosystem. It's got very loyal customers on that aspect. They just recently came out. They're going to allow some trading and some other stuff on that. So I think there's going to be enough upside if Congress and everybody else doesn't completely kill the economy. Then I'll just cry and I'll just hold it for a while until it comes to a point, and I'll just cry again and cry and just wait because I've done that. It's not like it's something new. So if I look here at the 28-day, so in this case, they're still talking. As you can see, anything 3 months out, basically. So here's 2 different stocks that we've looked at, and in both cases, they're showing a 15% move. So to me, that tells you the market doesn't really know what's going to happen over the next 30 days. So I think the VIX, I have to go look. I don't know what the VIX is at trading today. Last night, it was up at almost 24. NVIDIA did their outstanding announcement. They had their outstanding earnings, and thank goodness it didn't do like all the other ones that had good earnings. It didn't tank. So that saved the market a little bit for this morning. But I think it was still down to around the 20 level on that. Scott, what do you got? Okay, so it's still for relatively for what has been the last pretty much this year, it's kind of high, except for when we have the whole initial tariff spike when it went up into the 50s. I think it was 50s, almost 60. That it spiked there. What was that? April, when it spiked then, and then it came down, and everything went back to normal. Now that would have been a really good time if you had money to buy stuff. But again, if I knew the future, I wouldn't be standing up here. Let's go see. So let's go look here. So if we look at, let's pull up SoFi. Okay, so it's down. So it's down almost 4%. So, and as you can see here, again, this would also potentially, if this is one I probably wouldn't do a leap on, but one of the things that, because we talked a little bit, when it starts to get underneath to the lower part of the Bollinger Band, and then coming down towards the bottom of it, those are some opportunities in stocks if you like that stock to look at your calendar leaps. So again, more than 30 or more than 365 days out. Usually I've been doing January 27s, or potentially I might go to March 27s now that we're towards the end of this year. So let's see so it's at 2573. Go look over here. And this is what I love about these various things, because you can set up these little, you see this little 2, and they'll link across your pages. I go look at the chart. I might come in here. I see here that, okay, here's what the options are. So in this case, let's go. So actually, 20 is not bad. I mean, that's what was that? About 2%? At 43. If you went 20, if you went to the lower part of that. So let's go here. I'm going to go cheat. I have my SoFi here. As you can see, I've owned it, been called away. So you can see right now, I've got these 4 puts out here, which are underwater. If you can see, and if anybody wants this that I use, let me know, and I'm more than happy to share it. You can see here, when I put these on, it had to go down 12% in order to hit that 27. Right now it says 4%, so it's basically 4% under. So if I go in here, and I'm going to just, so that should be buy to close, not put. So let's just go here. Go here, 1120. Yeah, I use this more than I use the covered call calculator, the calculator. I'll go over to that here in a second and have hopefully Mr. Cox explain it a little bit more, because I always have a problem with it. So the dollar, and what do we say it was? It was we did 20. We did, let's say, 43 cents. And so that's at 20. So I look here for, it's a 2%. And usually, unless it's something that I really want to hold or want to potentially accumulate, I usually look for a 2% or higher on whenever I make cash secured puts. You can see here, we've got a 29-day hold. It says here it's got to drop almost 22% to hit that. Is that right? Is that calculation right? I think that calculation's right, yeah. So to go from 25 down to 20. So yeah, so that's a 20% there. So we go over here. Let's do the SoFi over here, but this time we're going to do a cash secured put. Let's go write that. Let's go look at the 29. So I said the 20. We'll go to the mid-range, which is 23. So we're going to calculate it. And so my calculations on my spreadsheet are the same as what's coming up here. So there's a 2.2% there. So you can see here. I always get confused. So there's 2%. So you can see I'm going to make 2% as long as it doesn't go below $20. Yeah. So, in this way, I just pocketed $40 some for the 30 days. And I'll show you here in a second what I'll then go do. So in this case, we're going to do this one instead of how I did the other one of I want to sell to open here. That's another thing I didn't show before is that you saw that you could either buy or sell. I do this. So in this case, excuse me. So in this case, I want to buy to, I don't know why it said buy to open. I want to sell to open. Probably because it saw that I had covered ones. I want to do one. So in this case, I'm going to do a limit. Now, why did that? What? Oh, because it picked up, somehow I clicked on the 22 instead of the 20s. So in this case, I'm going to do, what is that? 45 is the mid. So in this case, what I'm doing is I'm not going to the low. I'm not doing market. I'm saying, hey, I want 45 cents or more for making this deal. And actually, let's go here. Let's be greedy just for this example. We're going to say I want 50 cents. So I'm going to go preview here, and I'm going to go, okay, let's go place the order. Okay. So now I'm going to click here, and I'm going to say, hey, I want to go view my orders. So in this case, you can see here, I've got this open order. So you can see here it's open or closed. You see here, there's that HIMS one we did a little bit ago. And so I've got this one open. And so what I could do is, you see this C and this R. So if I wanted to cancel it, saying, I got to say, like, I really don't want to do this. I got cold feet. I'm going to bail. I would just hit cancel. And so it would go cancel. It would cancel that order because it hasn't been filled. But what I could do is I could go here. So it says here, the last is at 45. So maybe I want to replace it. So I can click replace, and basically what it does is it comes back in and it fills in all my information. And then I can go either, so, hey, let's just go market. I could change it into market order, or I could still leave it at a limit, and I can go, hey, I'm going to do 45. I'm happy with 45. I'm going to preview. I'm going to attempt to replace it. Now it tries to replace it because what can happen is it could get filled while you're doing here all this there. Well, we see in this case, okay, it actually filled at 46. It didn't fill at the 45, which I said. So on one of them, or on the older one, it gives you a little dollar sign next to it saying, hey, I got you more money than what you asked for. So that's kind of cool. So now, so then so that I can keep track of stuff, I go over here and I'll put 45. So, hey, now I got 2.3% on that versus what I had. See, what else? So we covered calls. Because the thing is that what I'll do is, a lot of times what I'll do is I'll put it out there, say for 50. And you can do it multiple ways. You can do, on Fidelity, you can do it for the day. You can do until canceled. I think there's even an option that you can specify a certain day of how long you want it to stay out there. If during the day it hits that 50, boom, it's yours. You got $50 into your account. Now you're on the hook to buy 100 shares of the stock. Now, if it comes up, it hits 49, comes down, goes down to 43, goes back up to 49, and then 3 o'clock comes along, nothing's happened. All you get is you'll get a notification saying, hey, nothing happened. And that's off the books, and try again tomorrow. So in this case, so here I started doing it earlier and I was not thinking through my there. So I just did. I'm going to go show you what else I do here is, so I've got that cash secured put on SoFi. I got 46 cents for it. So now I'm going to go see, okay, so what's basically my 80%? So 9 cents. So in this case, I'm going to go out there here in just a second, and I'm going to put a buy to close at 10 cents. So if it goes down to 10 cents, it automatically, I'll spend $10, it'll close it out, and I'll go to live another day. So in this case, it's 10 cents. Let's see what would have, what's the HIMS? So I got the HIMS for 41, right? So I'll do them both for 10 cents. So I'll get roughly 75 to 80%. You know, I'll get over 75, just a little bit less than my 80%, which is what I like to do on those. So if I go into here, you'll see here, here's the SoFi one that we just did. Come on. So then you can do sell more, close all, roll. So this should, okay, there we go. So now you see here, I want to close. So in this case, I'm doing one lot because since I actually could put it on here, but it will holler at me because I already have those other SoFis out there that are buy to closes in the same account. So I'm going to do one here and I'm going to do a buy to close, $20. I'm going to click on the limit and I'm going to put 10 cents. Now, what I found is usually you have to do it in increments of 5. Sometimes you can get away with it when it's lower, much lower, but usually they've limited me to the 5 cent side. So in this case, instead of saying day, I'm going to go until canceled. So that means that here it's going to sit out here until either it executes, I get assigned, or it never goes down that far and it just closes on the 19th. So I'll go preview, tells me, hey, what's the warning tell me? This is it saying, hey, since it's below 65 cents, we're not going to charge you our little normal fee of 65 cents, which is what each of those puts in that covered call cost me, was 65 cents. So now I just go place order. Okay, and I say, hey, I want to do a new trade. And so instead of SoFi, I'm going to do my HIMS. And I'm going to do, again, a buy to close. One contract. See, it was the 19th. And what was that price that I put at HIMS? Anybody remember? The HIMS was at 50, right? So it was 50. So I go to 50, I hit my call. It's much easier if you just go into your deal and click it from there versus a new deal. I'm going to do limit. I'm going to do 0.1, again, my 10 cents. I'm going to say good to cancel. So now right here, you can see here, I've got I'm going to have a buy to close. So now I'm going to hit preview. I'm going to place the order. Now if I come over here, you'll see now that I've got the open order symbol shows up here. And if I go to my little orders over here, you'll now see I've got this is pretty much everything that's happened today across all my accounts. So you see, here's the HIMS one we just put in. There's where we got it. We assigned, we canceled. Here's the one where the HIMS we did. Here's the ones that I have previously that have been open for a while. But as you can see right here, those are probably never going to execute. Because if you look at their current bid and ask, and those are probably at 25, or actually, as you see, that's at 20 cents, and their bid and ask right now is at between 6.90 and 7. So same with the two here's on puts. So looking more than likely come here in a week, I'm going to have more shares of PayPal, and I'm going to have some more shares of SoFi. So that's kind of the down and dirty of kind of basically how to operate within the Fidelity Trader Plus environment, which I really like. Most of the other ones are also really nice. We're pretty much out of time, so I pretty much turn it over to any questions, comments, things like that. Sean was going to be nice enough to have us use his Schwab account, which has a lot of the stuff and actually has even some other better things, I think, I think it gives you a better idea of what just on the screen of what your return is, whether you're going to get 2%, 3%, 4%, 5%, those kind of things. So we'll maybe down the road we'll look at. And so, dude, if I could make myself a millionaire, I would be more than happy to make you a millionaire. But I'm limping along right here. Again, I don't know. I haven't looked at the calendar. I think probably next month's going to be really hard to get one in. So I'm thinking maybe we punt on December And then we look at January, probably the third Thursday as we normally do, doing that. And so any ideas of anything that people want to have covered, please shoot myself, shoot Chris, throw it into the chat, throw it in the Discord, any of those areas there. I know that the Discord has been pretty silent lately. Not a whole lot of it. I mean, Scott, Chris, appreciate you guys. Hey, well, right now my biggest problem is Misty just ripping my face off again. What I get for trying to get some dividends and get some cash off that. And as I told Chris a while back, I should have dumped it when it was $12 more when I thought about it. All right. Thank you all. Hopefully it was useful.
That wraps up today's conversation on the Fidelity trading platform. We appreciate you spending time with us and being part of our community. If you have any topics you'd like us to cover, let us know in the comments. And if you enjoyed this video, please like and subscribe for more insights and updates from Masters and Crew. See you in the next video.